Hey everybody, Boris from BK Forex. Welcome to the weekly technicals for Aussie dollar, dollar CAD, Kiwi dollar, July 17th to July 21st, 2017. The COM dollar complex is going to take front and center stage this week. We have a lot of data on the COM dollar front. Let's take a look at the calendar actually first, and then we'll take a look at the levels. We have the Australian employment data this week coming up on Wednesday, very, very key. Before that, a little bit of New Zealand CPI ahead of this. And we end up the week with the Canadian data with retail sales and CPI. So three primary events in the COM dollar land. COM dollars themselves have been very, very strong. Really, especially the Aussie has been very strong, and the CAD, mainly on the carry trade flows. The fact that U.S. yields continue to decline and the fact that today's U.S. data was so poor really put the flow back into the carry trade, especially on the Aussie side, and brought Aussie all the way up to the very, very key resistance points that we're going to be examining right now. Let's take a look at the levels here because they're very, we're testing multi-month highs here in the Aussie, multi-month lows in dollar CAD, and Kiwi is the laggard. So Aussie now comes in with 77 support, 79, which we haven't seen in many, many months, as possible resistance. Aussie at this point made a big breakout that could signal a move towards 80 over the near-term horizon. Dollar CAD continues to be relentless move to the downside. This week was a very bullish week because the Bank of Canada came out with essentially a much more hawkish posture than everybody anticipated, stating that they are willing and very much likely and able to raise rates once more time. If they do raise rates before the end of the year and the Fed does not, that's a massive skew towards the loonie. And as long as oil holds at around the $40–45 barrel, it puts the loonie square towards the 125 on the dollar CAD basis. And the laggard of the week has been Kiwi, which is really coming up against some very heavy resistance at the 74 level. It had actually a big move to the downside a few days ago, came back up, still very much on carry trade flows. It may participate, but it looks to be still to be the laggard amongst the three to the upside. The really big trades this week and next week will continue to be the Aussie and the CAD. Let's take a look at the levels here and see how it shapes up. So here's the Aussie. Look at this massive, this is a weekly chart. The massive weekly breakout here that takes out all of this overhead resistance that we've had here since 2016, since really more than a year and a half ago, and puts us square up towards this level here at the 81 level. It certainly puts us towards the 80 level as a big move up. Now, a strong weekly move like this in the Aussie very much suggests that we have a chance here for more continuation. So occasionally it fails like you do have over here, but a lot of times you have continuation for maybe 200–300 points forward. So Aussie at this point still looks to be a very strong buy and a very big momentum buy, and could propel itself towards the 79–80 level, especially, and this is the key thing, if labor data comes in supportive, that really puts the neutral stance in of the RBA very much in play, dismisses all of these worry words about slowdown in the Asia-Pacific region, and certainly puts Aussie on path towards 80, especially in the carry trade flows. Dollar CAD, similar kind of situation, very relentless move. Look at this move here. These are weekly candles. We had 3 consecutive weeks to the downside. Really, the move started all the way up at the 37s and has just not given up. And the support at this point really doesn't come in until this, basically the 25 level. Today's move, 28, breaking the 28 650s, very strong. And of course, if the data, which has been very supportive over the last few weeks, this is the interesting part. Despite lower oil prices, Canadian data, Canadian growth has been quite good, and that is propelling dollar CAD to the downside as the Bank of Canada continues to sing a very, very hawkish tune to the marketplace. And then last but not least, here's the Kiwi, clearly having a much slower and much smaller move to the upside. 75 still very much the big cap. We don't have that much data on the Kiwi side. We do have the CPI data, but Kiwi seems to be very much the laggard. For now, it's clearly Aussie and CAD leading the way in the COM dollar land, and those momentum trades, especially the Aussie, given the fact that it's just had a, let's just look at this one more time. The fact that it's just had this massive weekly breakout is the trade to watch. Any kind of retrace here certainly looks to be more of a buy than a sell, with potentially a move towards the 79 handle as the week progresses, and possibly even all the way towards the 80 handle on the momentum basis as we go forward. So that's how the week shapes up. It's going to be all COM dollar land. I wish you guys the best of luck, the best of trading. Boris, over and out.